Welcome back to the Dividend Diplomats YouTube channel. You've got your boy Bert over here, and you're rolling with Lanny, the Dividend Diplomats, and we're here to talk to you about 3 dividend stocks to buy going into the month of September.
Before we get into the list though, smash that subscribe button, give us a thumbs up. Everybody, thank you for your support so far. We cannot wait to talk to you about 3 dividend stocks that Lanny's going to be keeping his eye on in the month of September. Get ready, everybody.
Keep my eye on 'em.
Get hyped up, get excited.
Get your coffee.
Yep.
Where's yours? There it is.
Coffee is over here.
Cheers, brother.
Yep.
The Diplomats mug.
Yeah.
We're still trying to figure out the merch.
Yeah, we'll get
on
there.
YouTube.
If you want to let us know if you would buy a coffee mug in the comment section so we can help push it a little bit further up the pipeline, we'd love to hear. But you didn't come here to talk to us about coffee and coffee mugs, although we could if you want to. We would be happy to. We're here to talk to you about dividend stocks. Lanny, you want to give a little preview about your list and what you were thinking going into September?
Yeah, of course. I always like to try to find stocks that are currently in my portfolio, which again, I'll put the link in the description below. That takes you right to the portfolio, completely transparent, so you can see what Bert owns and what I own in each of our portfolios. So I always like to add to my current positions just because, simply having a new stock in there just means another stock for me to monitor, to read their 10Qs, look at their press release, read 10Ks, and be very aware of what's happening. And, there's always a certain time frame that, it just too much is too much.
Yeah, no, I understand. It takes a lot to monitor their portfolios. We love doing it. But there are even limits to how many financial statements we want to read at the same time. There might not be enough coffee to monitor hundreds of dividend stocks in your portfolio. So I got to respect and I appreciate the fact that you just want to keep building positions that you already know, because you already kind of pre-vetted those positions. You bought them once. You like the company, their fundamentals.
I'm shaking them down a little bit, took what's in their pockets, had them on their way, and said, go give me some more dividends.
Yeah, now you just show up once a month with a bat, and you're just like, give me my dividends.
Hey,
here, it's time to pay for protection.
My cousin Johnny, my uncle Tony, my cousin Guido will come after you.
Yeah, the neighborhood mafia here for this dividend portfolio.
But the S&P 500 currently is setting enormous records. And Bert, what was the threshold they just crossed?
4,500. So this stock market is insane. For the month, the percent, entering the month of August, it was in the below 4,400. So it increased over 100 to end the month. So some phenomenal stuff and phenomenal growth as the S&P 500 will not cool off and continues to push record high after record high after record high.
So we want to find undervalued dividend stocks right now in the current market. And to do that, we push them through the Dividend Diplomats patent pending stock screener. And that focuses on the price to earnings ratio less than the S&P 500, and we try to compare it to their competitors. Second is that dividend payout ratio, which really speaks to the volume of the safety in the dividend, as well as the company's ability to grow the dividend and reinvest back in their business. Third, we look at the dividend growth and how long they've been increasing their dividend, because you want a consistent track record of your income that grows and grows above the rate of inflation. And Bert, what's that bonus metric we toss in?
The dividend yield. So we're excited to see the 3 stocks that Lanny found that check the metrics of our dividend stock screener. So remember, the prices in this video are as of August 27th close. So keep that in mind as we list the prices, and you'll see screenshots of the prices. Just remember, as of August 27th. So Lanny, let's talk about this first company. I'm excited for you to share this with the rest of the group here. Who is this first stock?
So this first stock has been a very popular stock as of late, because they are now, I would almost call the birth of Pfizer and Mylan, really doing the spin-off really to form this company called Viatris. So the first stock is Viatris, ticker symbol VTRS.
I can't believe they don't have that as their tagline. Viatris, the birth of Pfizer.
Yeah, I wonder if they used the blue pill to create Viatris, which is
one of their products that was spun off.
One of their products. You have Viagra with Viatris. You've got
Zoloft, a lot of huge drugs that are prescribed to people. So yeah, what Pfizer did was they spun off a lot of their legacy brands into this company, and when they had this joint venture, that's why we like Viatris. Pfizer didn't just spin off a bunch of junk and say, get out of here, like what AT&T did with DirecTV. They spun off and created a quality dividend growth stock going forward.
So yeah, Viatris, ticker symbol VTRS. They were currently trading at $14.37. And analysts are actually projecting an earnings per share of $3.64. So Bert, what is that price to earnings ratio for the
I had to
first
just
metric?
check that to make sure it was right. But yeah, no, that PE ratio is 3.95 based on the current metrics, everybody. Holy cow. And we know this is their first year of being traded after the spinoff. So everyone's trying to figure out what's the right valuation. I don't care what you tell me, what the right valuation is. 3.95 PE ratio is always going to be cheap.
And always deserves a spot on the stock watch list as they're trying to discover kind of who they are, what that operating cash flow is like. You know, again, I think this is a very cash cow heavy business model with all these brands.
Yep, I know, I couldn't agree. And they've already declared their dividend. They've already announced what type of dividend they're going to be paying going forward. It's 44 cents annually. You divide that by the 3.64 for DPS, it gives you a payout ratio. It's very low of 12%.
So that's that dividend payout ratio metric.
Yep, it's a very low payout. There's plenty of room to keep growing that dividend going forward as this company discovers itself, like Lanny was saying.
You know, I cannot wait to see, you know, maybe 3 more quarters of what Viatris will be able to report, as well as what they really do come Q1, Q2 of 2022 with that dividend. Because with that payout ratio being so low and expectations of earnings so high, it only sets room to increase the dividend by a large amount.
Mm-hmm. Exactly. And the third metric that we have is a little off because of their first year. We don't know.
No dividend growth.
The only thing we can look into is Pfizer has increased its dividend every year from the financial crisis. You don't know how that's going to be applied over here to Viatris.
Viatris, just increase the dividend next year.
Yeah,
Do it.
Do it. The one case study you have is after Abbott and AbbVie spun off, AbbVie has increased its dividend every year. Abbott has increased its dividend. To your point, Lanny, we'll know more next year in 2022 to see if Viatris is going to keep growing its dividend in a similar manner to Pfizer.
And if you caught the last video for the increases from last week, Altria spun off from Philip Morris, and Altria has also increased their dividend every year since the spinoff. So let's see it. That's why Viatris is on this list. The dividend yield as the bonus metric here is 3.06% based on that close price and current dividend.
I'm going to shake my head because that's phenomenal. With such a low payout ratio and a low P ratio, they still have dividend yield of 3%.
So
phenomenal.
Dividend growth, we're calling you out. Let's see it. Make us proud as shareholders. Make me want to continue to buy your stock, Viatris.
Dividend stock number 2 has been on our watch list for how many months now? It feels like 5 months, 6 months, at least all of 2021.
You know, at least since we were 15, maybe 12 years old. A long time on this watch list.
Maybe that long, maybe not. It could be 6 months, 7 months, but it
probably,
could also be 15, 20 years too.
Q4 of 2020, I think we started really I know I started by scooping them up.
Even longer, I waited a little bit. This company is Verizon, ticker symbol VZ. They have had some interesting news recently that keeps piquing your interest. They are racing AT&T and T-Mobile to become the leader in 5G. They went through those massive FTC auctions early in the year where they poured a ton of capital to grow their 5G capabilities.
Yep.
And what are we seeing now, Lanny? They're continuing to roll out 5G into new cities. What did you say was 5 cities that were announced?
Yeah, 5 new cities. 1 in Oregon, you know, Albuquerque, New Mexico, Austin, Texas, Little Rock, Arizona, as well as, again, these are all big cities. Mm-hmm. Nashville, Tennessee. So that now has, they're up to 47 cities that have 5G.
But think about what you said. Those are big cities. Those are huge, dense populations. There are a lot of new potential customers for people that are looking for a strong, reliable 5G connection. Could be huge for Verizon.
Huge for Verizon. They actually just finished their second, what they call a green bond, $1 billion green bond, which they're using those funds to help them get to a net zero on the emission scale by 2035. So again, I think they're the only telecom company that's out there doing it. Again, gives them a lot of good press. You know, you get that feel good, like, okay, they're trying to get to net zero here.
Oh, it's a cool headline because there are a lot of investors that are always looking for responsible companies, thinking about social responsibility and actually care about things more than just the profit. So it's a cool headline to see. But you aren't here for all the headlines and all the news. You're here for the metrics. Let's start running them through the screener.
What's that first price to earnings ratio?
They closed
metric?
at 54.77. Their forward earnings EPS is $5.31. That's a PE ratio of 10.3.
So it continues to hang in that 10 to 11 range on the price to earnings ratio scale. Again, the S&P 500 is at 35 times current earnings, so Verizon is at a significant discount comparatively, and that stock price has really always been in that range of 54 to 56 as of late.
Metric number 2, the payout ratio, $2.51 annual dividend. Divide that by the forward earnings, that gives you a perfect dividend payout ratio of 47.27%. Again, we always say it, a perfect payout ratio is between 40 to 60%. It allows a company to reinvest its earnings back into the business, but also pay shareholders a very nice return as well.
You know, I don't anticipate strong dividend growth, which is the third metric, but with that payout ratio being just in that mid 40%, it still keeps room to grow the dividend, reinvest back in the business, the 5G, the fiber. They're trying to just be that main provider for a lot of businesses and obviously residential consumers out there. But so Bert, speaking of dividend growth, what's that third metric look like?
So their 5-year average dividend growth rate is 2.12%. They've increased that dividend for 16 years, which is phenomenal. They're on the road to becoming a dividend aristocrat, which is a company that has increased its dividend for 25 consecutive years.
Definitely on a better highway right now to a dividend aristocrat now that AT&T has decided to take the exit ramp and, you know, ride off into either retirement or, you know, obviously everybody knows about the Warner Media deal with Discovery, that spinoff that's happening there. Dividend will change, and I think they're trying to shape themselves up to be a little bit more like Verizon, it sounds like.
Yeah, I think that's a very accurate comparison. I think they would say the exact same thing. That's the sector that they want to play in.
So Verizon, you know, I own a lot of shares in Verizon right now as I've been building my position, which you've already seen either in the dividend articles or our dividend videos. I'm cruising towards almost 100 full shares of Verizon. I'd like to almost get to that solid metric. So I'm about 15 shares short, which is why it's still on this watch list.
Let's get you to 100.
Let's get me there. So Bert, what's that bonus metric now that we've gone through the first three?
Their dividend yield is 4.58%. Fantastic stuff.
Are you buying?
Maybe. We'll see. We'll see how the week goes.
We got a maybe from Bert.
I'd like to get to 50 shares. I'm in the 40s, so
Oof. Oh.
We'll see. I got some.
Oh, he just needs a little nudge.
Yeah, speaking of nudges, let's nudge ourselves into the third stock on the watch list. If you want to talk about social responsibility, right here, nothing screams social responsibility quite like the oil sector, does it, Lanny?
I tell you what, I wish I could say that it completely does. But this third dividend stock, it's hard not to have one of these potentially oil pipeline companies on your stock watch list as a stock to buy because there's still some value there. I think as the price per barrel continues to go up, which we're now well over $72 per crude oil barrel, and that price is obviously significantly higher than where we were 52 weeks ago and where we were a few months ago.
Yeah, and what's interesting though is the stock prices for the oil companies continue to go down. But what's also cool is you're starting to see dividend increases creep back in for a lot of the oil companies. You're starting to see announcements from Shell, from BP, a lot of the major integrated oil companies. Now that the price per barrel is increasing once again, they are bringing back their dividends, which is why I can see why you are putting an oil company back on your watch list.
And, you know, I rolled the dice in the past, got stung a little bit, but I feel like the company definitely took strong note once they had the credit rating cut. This company is Kinder Morgan, ticker symbol KMI. They are on this watch list as a stock to potentially buy right now. Currently trading at $16.59. Let's slide into that first metric, the price to earnings ratio. And again, you really look at operational cash flow for Kinder Morgan, but we're going to keep it consistent with the other two companies we've looked at. Their current EPS that analysts are expecting is $1.32.
How dare you propose going away from GAAP numbers there, Lanny?
Yeah, GAAP versus non-GAAP.
Yeah.
For all you accountants out there and auditors, give us a thumbs up on the video if you know about GAAP and non-GAAP measures.
Yeah, but in all seriousness, it is probably the right metric to look for in the oil sector. So as you said, the P/E ratio is 12.57, another huge discount to the broader market.
Yep, and they currently pay, going in that second dividend metric, the payout ratio, they currently pay a 27-cent quarterly dividend, aka $1.08 annually. That payout ratio is at 81.82%. Yes, that's high. It's high because we're looking at obviously earnings per share as the metric to look at for the dividend, but it's under 100%.
Yep, and that's what I think I think if you're happy, I'm happy with it because it's the oil sector.
He's
You
happy.
expect higher payout ratios in it. Nothing more to say. But their 5-year dividend growth rate, moving into that third metric, is 8.55%. And that's interesting, though. It's an interesting metric because at the beginning of that 5-year span, they were not increasing their dividend, and they just returned to dividend growth. I think it was 3 years ago, right, Lanny?
You're right.
So think about that. Your 5-year average only has 3 years of dividend increases in it, and it is still 8.55%. That says a lot about how much they've been increasing that dividend recently.
And their most recent increase was actually very, very small. It was at only around 3% on their most recent increase, obviously coming out of a pandemic. So they've still continued to increase it during and after the pandemic, which is great, speaking of the industry that they're in.
But you know what? You made a point earlier, and I was kind of laughing because you said that a bond rating helped them wake up and readjust how they're managing. You would hope that having their rating decrease and going through a dividend cuts would give it a nice wake-up call. That is your sign right there that the management gets it and they're doing a better job of managing their balance sheet. They had committed to 10% plus dividend increases as they came out of the dividend cut and their balance sheet was better. The market changed, price per barrel collapsed, we hit the pandemic, and they said, we can't hit the 10% dividend increase that we're shooting for. It's more responsible to announce a 3% dividend increase. It says a lot about KMI.
And Kinder Morgan, to go back a little bit on their dividend path, as we're still on here, this dividend growth rate discussion, when they started coming back with their dividend in 2018, they increased it by 60% that first year in 2018, from 12.5 cents to 20 cents. Then in 2019, they went from 20 cents to 25 cents, a nice increase of 25%. Then obviously in 2020, it wasn't as strong because, again, pandemic just started. They went from 25 cents to 26 and a quarter, and now they're at 27 cents a quarter. So I'm predicting and expecting more than likely around a 2-cent increase come 2022, which again, that would be around a 7.5% increase.
Seems prudent to me. We'll see if you're right. Lastly,
let's remember this about 6 to 9 months from now.
I'm sure you will be the only person that remembers that. So the bonus metric here, the dividend yield is 6.51%. So a nice, juicy dividend yield.
So when you take that yield of 6.5% and the average dividend growth rate of 8.5%, what do you think of that, Bert?
I think
that's all I gotta say
about that. So everybody, those are our 3 stocks right there. Viatris, Verizon, and Kinder Morgan right there. Lanny, phenomenal dividend stock watch list. 3 great companies in your portfolio. I can see why each one of these companies have earned a spot on your watch list for the month of September.
Those are 3 dividend stocks to buy right now. Thinking of what other stocks to buy, leave those in the comments. Again, I own all 3 stocks, with my smallest position being Viatris, the next being Kinder Morgan, and then Verizon in terms of the order of what position percentage is as a part of my overall portfolio. And Bert, I think you own all 3 as well.
I do. My order, Kinder Morgan, Verizon, Viatris. So
Kinder being your biggest position?
Yes. Yep, of the 3.
Got it. Understood.
We'll see. I'm most likely from this list going to add to Viatris and Verizon. I'm heavily allocated in oil, so I'm taking a little breather from there to help building up the rest of my portfolio. But again, I see why you are watching Kinder Morgan and may add.
I may add, I do like, I want to get to Viatris at a good position as well, maybe around 150 shares, so I'm still a ways to go. Again, I want to get to 100 shares with Verizon. And Kinder Morgan, I may just trickle in a share here and there just because of a why not. It's a very small position in my overall portfolio. Again, I think it's less than 2%, so it's a very small company in the overall pie, and that's the way that I try to reduce my risk from a concentration standpoint. Let us know what is your favorite of the 3 and how many of the 3 you own and how many of the 3 of the stocks that we've listed that you're buying.
If you haven't already, subscribe to the channel. Give us that thumbs up, everybody. Thank you for tuning in to our YouTube channel again. Lanny, why don't you send us off here?
That was Bert the Hurt, and this was Lanny from the Dividend Diplomats.
Over and out.